29th of June 2022. This isn't financial advice. I haven't been doing many videos because there hasn't really been a whole lot for me to do. So jumping straight into it, we had a follow through day, this day here, and so this is on the NASDAQ, and I understand there's some index rebalancing going on here. Anyway, last night, big down day again, counters a distribution day. So yeah, once again, this rally attempt is severely questionable. So yeah, I've had no positions on for a while now, and still don't. Yeah, the trend, at least in this NASDAQ, is still sort of very clearly down. So I've sort of ditto the S&P 500. Didn't really qualify as a distribution day, but equally, yeah, a big outside sort of bearish day there. So let's just go sort of across my sort of range of indicators. I try and sort of come up with an overall sort of opinion. So like I say, we've had a follow through day. Again, it's failed. We've had a number of failed follow through days now, which is telling you we're in a pretty bad bear market, if that isn't just sort of obvious anyway. If we couple that with a few other indicators, I'm just going to pull across. This is the number of percentage of stocks in the NASDAQ 100 that are above the 50-day moving average. And it was starting to climb back, and it just got slammed again, so it's below 20. So below 20% is usually where I sort of, okay, right, let's get interested, at least on a sort of contrarian basis. But we've had this fail a few times now. So again, showing you when this sort of indicator fails multiple times, it's showing that we're in a really, really bad market, not just a normal sort of pullback. If we also do the number of stocks trading above the 200-day moving average, yeah, it's just back down to 15%. So this indicator, I'm normally getting interested below 15%, but yeah, same as the previous indicator, it's failed yet again. So just showing that we're in a pretty awful market. So it's important not to use any of these indicators. I found in isolation. You can sort of look back and go, oh, there's a good correlation here, but it works until it doesn't. So this indicator is great a lot of the time, but 2000.com crash has failed spectacularly, and then also failed spectacularly a number of times in the 2008-2009 GFC period. So couple that with, let's just get rid of that. I just can't see many individual stocks out there. I mean, every time I look at charts over the last few weeks, it all just looks, I think, really messy, and I'm thinking, was it just me? You know, maybe it is, but I just can't see it. Everything just looks so sort of scrappy, and things that might look like they're about to get going, or they're just not really. Also, if I just look at valuations on a lot of these companies, they're just still really expensive. So it just goes to show how much of a sort of a bull market we had. So I'm just going to come on to individual stocks in a moment, but yeah, sort of scanning through charts, I really can't sort of see that much to get excited about. You can note that some of the tech stocks, you know, Zoom, for example, they haven't taken out their lows from a few months ago. So I think the best case you can present there is that they're forming bases. Now, how long they need to base before they ever, if they ever get going again, yeah, only time will tell that. So also looking through the top 25 industries according to IBD, it all looks pretty scrappy to me, as in like stage 1, stage 3. I can't see a nice early stage 2 charts in the top 25 industries. And I think probably most importantly of all, there's just absolutely no Fed put being activated. So we're still very clearly in a tightening cycle. So yeah, I think unless we see that, unless we see charts start to sort of start forming properly again, add all of these up, and it's still just a no-go for me. Now, So for me, that's a classification. It's just a red traffic light, which means do very little, or potentially go short. I haven't really been doing sort of anything on the short side. And obviously should have been in hindsight, but it's not really sort of my thing right at the moment. I've also found put options to be really expensive, so yeah, I've just stood back and done nothing. So I think this is the longest I can think of in a very long time that I haven't done any trades. So yeah, which is sort of frustrating. But anyway, so next, on the bright side, you could make the case that oil stocks. Let's look at ExxonMobil. Now, I thought so. Yeah, came over base here, tagged the 50-day a few times. Clearly, stage 2 there. I was thinking this was a stage 3 blow off, and that might be it. They did have a pretty violent shakeout here, a bit out of character with those previous pullbacks. Yeah, stocks got vomited out. It's now sort of recovered the 50-day moving average. So where these stocks go to, these oil stocks go to from here, I don't know. This might be the place to make money. It honestly feels like pennies in front of a steamroller at the moment doing this, but I think this is probably the sector. Same here. Actually, this is the one that Buffett's been buying. Had a few good days now. I haven't bought it, and I'm certainly not going to buy. I've made comments on numerous previous videos. I'll sort of buy a stock just because it recovers a 50-day, but you can see here it's just had a few good days. So in this sort of market, buying a stock after it's had a few good days is usually really not the right thing to be doing at all. But there's still, you stand back and give them the benefit of the doubt there. Still an uptrend, is unlike most other stocks. So Shell might be interesting. It's sort of tagged with 200 a day here. So I'm just going to keep an eye on this space, and especially these big sort of oil stocks. Maybe saying that the 50-day moving average is also rolled over on plenty of these stocks too. So to tell you the truth, I'm really sort of not quite sure and not feeling really any desire to go hard or do anything. Especially, like I say, we've got the bigger picture in mind here, that the market is just awful and difficult to make money on the long side. I've been looking for where's the potential new leadership on Twitter, because new leadership is where we're going to make that sort of next serious money in the next bull market when it comes around. Some people on Twitter have been pumping solar stocks. This is the ETF. I honestly just don't see it personally. I get that it's probably better than a lot of other stuff, but that doesn't mean it's a buy. One stock that's been mentioned in particular is Enphase. Let's just go to the weekly. Obviously, it's had a big run here. It's basing, so to my eye, this is either it's in a stage, gone back to a new stage 1, or potentially stage 3. This is all looking pretty just sloppy and loose here. So I don't see anything to do here at all. Looks like it had a big BGU type moment here, and then went only on just to fail that. So I don't see why this should be considered sort of anything special, at least for the time being. I've been tracking IPO stocks that are listed from last few years, so from 2019 to now, but also put in the screen that they've had to have at least not a negative price movement over the last 3 and 6 months. I'm looking for IPO stocks that have based. So there's an awful lot of IPO stocks that came out, but a lot of those are in pretty serious downtrends still, so I've got no interest there. The general theme I'm seeing across those stocks is, sorry, just to back that up, if we can find like a Google or a Facebook that sort of IPO recently, it's going through its what's called institutional due diligence phase, and when the market's ready to roll, that's when you can have your next monsters coming out. So I've incorporated that as my hunting ground. But again, in there, I'm not really sort of seeing too much to get excited about. The two general themes I'm seeing is biotech and some of the Chinese stocks. So yeah, both. Maybe it's my bias, but both have got sort of definitely whiskers on those. Give you two examples. The Chinese stock is Li Automotive. Again, let's just go to the weekly. IPO'd, sort of been basing, faffing around. I think hasn't really done anything wrong here, to be fair. And then sort of tried to push out to a stage 2 here. Big earnings numbers there. But yeah, it all still looks pretty loose to me. Maybe I also need to keep an eye on for a pullback here. Yeah, it's just tough. One thing I've noticed that a lot of the Chinese stocks have they had their sort of moment of capitulation. Was it 3 months ago, or 3 or 4 months ago? Oops. Yeah, back here. So it's back in March, and since then they've actually been basing quite nicely. So maybe the future leadership will come out of Chinese stocks. Who knows? Of which Li Automotive is one of those. So yeah, we'll keep an eye on that. Another one is, was it called Dawn? I might have this wrong. So this is moving to the biotech. So IPO just been sort of moved up massively for some reason here, and so far I managed to hold that. So I don't think I've ever traded a biotech in my life. So yeah, might be something I might have to try and get used to, I guess. And back in the China space, so going back a bit, remember there was the Chinese government said they're going to crack down on education companies that were profiteering too much, which they did that. So this is one of them. I understand it's one of them. See on the weekly, it got up to 190. Now it's down to 18. And I was starting to think, well, is this a bit of a bargain? Especially if Chinese stocks are going to be the place. It looks suspiciously sort of flatlined here, so I don't quite know why. But anyway, it's sort of basing here, maybe sort of pushing out to a stage 2 and going through a pullback. Just looking at the numbers though, so it's got a market cap of $31 billion, and that's a pretty wild variance in earnings there, but it's not really earning sort of, particularly much there. So if you went back to 21, I guess that does make it look a bit cheaper, but it's still quite a big market cap for what this thing really is. So yeah, I'm just not sure there. So again, I'll keep an eye on it. Haven't sort of rushed into this area at all. So yeah, that was about it. So in general, so market is a red light traffic signal for me, which means either don't go near it or be very, very cautious. Particularly there's no Fed put. Oversold indicators keep failing, which is telling me that the market is really bad. Obviously there's a lot of doom and gloom out there, and inflation not coming down and interest rates going up. So there will come a time that it's to be buying, but I'm just not seeing it right at the moment. So yeah, I haven't been sort of doing any trades, but yeah, I'll just keep monitoring the market.